Welcome back to Home Chat. We're here with Kasie Willis from Auto Mortgage Masters, and I thought it might be really helpful for us to talk about some uncommon scenarios in mortgage loan approval. So I think the first one, and it's one that you've raised in the past because it's come up for you. It hasn't come up for me with any of my buyers, so I was really interested to hear this. So you were talking about how to go about establishing a credit score when you have absolutely no credit.
Right. So some people come to me and they say, listen, I really want to buy a house. I've saved up the money, but I have no credit. So I probably have a bad, or they assume that they have nothing in their name, so they have a really bad credit score.
Right.
Well, the thing is they have no credit. It's a 0 when I pull it. So you need to establish credit. And they get so scared because they feel like when they hear the word credit card, they just feel like it's the worst thing ever and they shouldn't do it. But in fact, that's how you're going to build it. And you just manage it correctly.
Yeah.
So when you have no score, you're going to open that credit card and it's going to take 6 months to reflect. It's got to report, show you're making those monthly payments and you're buying something small, paying it off. And then in the 7th month, we'll pull the credit again. And then we're going to have an outstanding score. You're going to have easily in the 700s, mid 700s.
So
that's what I've always come across.
So in 7 months, you're going to go from 0 to in the 700s of a credit score with one credit card.
With one.
That's crazy. Well, that's a neat little trick if you have no credit out there. So if you want to buy a home loan, start preparing 7 months before you're ready to start shopping.
You don't have a score.
Yes, for sure. Okay. Let's talk about, because of course, as a realtor, I'm very familiar with this because we're self-employed.
Yeah.
What are some of the criteria for self-employed people to get a home loan?
Okay, so it's super easy. People think it's really hard. You just need to be doing it for 2 years. We need that 2-year tax return. We have to average income. You're going to write things off, and then you have your, income at the end of the day after all those things, and that's the number we're going to qualify you on. So just so you do know, when you're self-employed, you may make $150,000 that year, but at the end of the day, when your tax preparer writes everything off and your expenses, you may only claim 80. So when you come in to see me, that's what I'm going to have to go off of.
So you're going to have to go off what their net income was, not their gross. Okay.
Right.
Okay. All right.
Yeah.
But other than the 2 years of tax returns, is there anything else that comes up with the self-employed?
There's really not. I mean, everything's going to be a different scenario and people are going to have specific things that come up and we'll address those as they come in, but I've never had anything that's really kind of put a wrench in it where we can't do it or can't figure it out and work around it. We'll do that. You just really need to get that foundation and have 2 years in first.
And then, of course, I mean, it all comes down, like your interest rate all comes down to credit worthiness.
Right.
So you have your income, they measure your debt versus your income, but it's also your credit score, like all of the usual factors that have to do with getting a loan.
Still have to meet all that as well.
You still have to meet all that as well. Okay, fantastic. Well, those were a couple uncommon sort of scenarios in the mortgage loan process. Thank you so much.
You're welcome. Thanks
Kasie.
for having me.
Yes, thank you. And you'll see us again soon.